Bismillahirrahmanirrahim. Assalamu alaikum. My name is Imran Hussain and we are going to start a series of sessions on Islamic banking and finance. Practicing Muslims and Islamic scholars truly want a financial system which is free from riba, interest, and other ills of financial transactions which are prohibited in Islamic Sharia. Therefore, due to internal persuasions of Muslims and Islamic scholars, there is a danger for both to unintentionally taking the side of such system which is introduced in the name of Islamic finance or speak or opine wrongly for Islamic banking and finance in the name of Islam. But I believe no one would like to replace interest for interest in the name of Islamic banking and finance intentionally, as we know that our deeds shall be dealt by the Allah subhanahu wa ta'ala hereafter as per our intentions. In the current series of understanding the Islamic banking and finance, I intend to minimize the danger of speaking false by not taking the side of any system and talking fairly about the less controversial and mostly commonly practiced products and contracts of Islamic banking and finance which are approved by majority of the Islamic scholars. My efforts shall be to share knowledge and information in precise and most commonly understandable manner for the benefit of a common man, enabling him to decide about choosing conventional banking system which is said to be based on interest or banking system which is practiced in the name of Islam. After knowing about the foundation of Islamic financial system, one may decide as to how to avoid the riba and how one can save himself, his family, and friends from the war against Allah and His Messenger, peace be upon him. The listeners may decide and consult the Islamic scholars of their own schools of thought, but keeping the basic knowledge and framework of Islamic banking and finance in their minds, which we are going to discuss here. It is important to note that I'm not going to endorse any particular industry or system in order to keep myself impartial. If anything based on further research proves to be incorrect in any of the system, that shall be shared, discussed, and presented accordingly. Interest is the root cause of most of the world's problem. Every economy needs compound growth and involves in interest and compound interest theory. To achieve economic growth by hook or crook, we can see the countries which are tapped into debt induced poverty, resource hungry wars, and race of all ethical and unethical practices. Economies grow slow, debt grows fast, and interest adds fuel to it. Unmatched economic growth weakens the economy and living standard of the people. More loans, more debt servicing, and unending interest are pushing more people below the poverty line. We can take examples of many interest based and debt trapped countries like Sri Lanka, Pakistan, Brazil, Tunisia, Maldives, Laos, Tajikistan, Angola, and many other countries. High foreign debt hampers the development of these countries because the money has to be used for interest and principal payments and is not therefore available for key investments such as infrastructure or social spending of the country. Although there are some other issues like the loans are often used for the consumption of goods rather than for productive investments, poor debt management, and low government revenues due to inefficient tax policies and weaknesses in the rule of law are common among these countries, and these are the internal causes of a poor country to remain poor. Structural problems such as poorly diversified economic and export structure result in their economies being highly vulnerable to price and demand fluctuations on the world market. But again, the interest based loans plays a vital role in keeping the people of poor economies poor. I believe there is a connection between interest and many of the world's economic problems, and that Islamic finance can help us to resolve some of these problems. But for this to happen, we need two things. One is the letter of the law and spirit of the Islamic law. For the letter of the law to work, Islamic finance needs to be followed with the basic minimum standards prescribed by the Sharia. And these standards need to be seriously taken by the financial sector regulators. It will be a good starting point for following the letter of the law. But Islamic finance also needs to follow the spirit of the law as well, which perhaps lies in rejection of interest and following the equity based structures under partnership modes of musharka and mudarba. And we need to address the larger problem of interest based debt and banking. Just examine the credit creation process of conventional banks and decide, why do banks get to lend money that they don't have and make money on money that doesn't exist? Does this make sense? So, you cannot do this artificial credit creation process in the Islamic financial system. And you won't be able to create credit unless you have an asset of a comparable value for the same. To understand the whole process of dealing in the real asset and concept of economic purpose, we need to understand the concept of Islamic banking and finance. It is very easy for us who are familiar with the fundamental tenets and sources of legislation in Islam. But those who don't understand the basics of Islamic Sharia, we shall be trying our best to make it clear for such interested audience as well. Based on the work of Islamic scholars, different fatawas, and decisions of jurists and jurist councils, we have a new phase of banking and finance under the title of Islamic Banking and Finance, which may be having a number of shortcomings of its own, but basic principles have been drawn from the sources of Sharia. They are Quran, the Constitution of Islam, the Sunnah, Ijma, Qiyas, and where necessary, the help from Istihsan, Masala, Musala, Saddazarai, and Urf. Over the last few decades, the Muslims have been trying to restructure their lives on the basis of Islamic principles. They strongly feel that the political and economic dominance of the West during the past centuries have deprived them of divine guidance, especially in the socio-economic fields. Therefore, after acquiring political freedom, and the masses are striving for revival of their Islamic identity to organize their collective life in accordance with the Islamic teachings. In the economic field, where the entire financial system is based on interest, it is the biggest challenge to reform financial instruments and institutions in accordance with the Islamic Sharia. People may think that abolishing interest from the financial system would make it a system of social welfare without any return or profit, but this is a wrong perception. As Sharia does not restrict us to earn money, but it restricts us to earn money with only permissible and halal modes. And of course, it does not allow riba or interest, and as it has declared it haram and it has been prohibited in Islam, but it does allow legitimate and halal business profits and incomes. Obviously, financial institutions cannot give interest free loans as they are not charitable organizations, but they can extend finance for the purpose of profit making, where the financier agrees to share certain portion of profit with the financier. He must also agree on sharing the loss if they occurred according to one's contribution of the capital in the business. This will not guarantee a secured investment and secured profit, but it is rightly based on the principles of fairness and justice. As if one wished to share profit, he must bear the risk of loss. And this is one of the basic rule approved by the Islam to earn profit. Simply, if there is no risk, there is no pain, there is no gain. So it is thus obvious that exclusion of interest from the financial activities does not necessarily means that the financier cannot earn a profit. If financing is meant for commercial purpose, it can be based on the concept of profit and loss sharing, for which we have musharaka and mudarba, which are permissible modes of partnership since the very inception of Islamic commercial law. There are, however, some sectors where such types of financing based on the partnership is not workable or feasible. For such sectors, the Islamic scholars suggest other instruments as mode of financing like muraba, musawma, ijara, salam, istisna, and diminishing musharka, which are used in the Islamic banking for the last over 3 decades. In our next videos, we shall be trying to communicate the basic concept of Islamic banking, the instruments used in Islamic banking, and their Sharia requirement, which are prescribed by the Islamic scholars and which are deemed necessary for acceptability of Islamic banking and finance in Islam. We shall also be discussing the difference between Islamic and conventional finance when both the systems look similar and result is the same. Then what's the difference and justification for a new system in the name of Islamic banking and finance? So at the end, I beg the forgiveness of Allah for the mistake I make and pray that He makes my effort a fruitful one. Jazakallah khair. Thanks for watching. Allah Hafiz till the next video.